नमस्ते फ्रेंड्स श्री आर के वर्मा AIBRWA के वाइस प्रेसिडेंट ने एक पत्र DFS को मिनिस्ट्री ऑफ फाइनेंस को एक पत्र लिखा। रिस्पेक्टेड सर, पेंशन रिवीजन इन पब्लिक सेक्टर बैंक्स, फैक्ट ऑफ द केस आर एज अंडर। सर, in respect of the long outstanding issue of bank retirees, we wish to submit that a wrong narrative and the concept has been established that there is no provision of the pension updation in banks, Pension Regulation 1995, and that the pension in public sector banks is a funded scheme. Such an affidavit was also submitted by IBA on behalf of banks in court without any authority. Our submission is that it was a wrong move. We invite your kind attention to clarify the factual position just before the final arguments to be put up in Supreme Court on the 10th November 23, with Solicitor General of India may argue before the bench hearing on the fact of the case. Firstly, it is a false perception that pension scheme is a funded scheme in banks. We wish to clarify that it was initially funded by employees only by surrendering by bank share of provident fund, otherwise payable to us in lieu of option for pension in 93-94. We invite your kind attention to following points. First, Regulation 11 is regarding actual investigation of funds, according to which the bank shall cause an investigation to be made by an actuary every year into financial condition of the fund on 31st March to ensure payment of the pensionary benefits and to make good any shortfall by annual contribution to the fund under these regulations if required. The condition laid down as above is not followed by many banks. Second, the banks did not contribute its share as agreed to the pension fund at the time of allowing second option, whereas bank recovered 156% of the bank share of the PF from retirees. Third, during the difficult time of Corona, big banks did not deposit their share of monthly contribution equal to monthly provident fund contribution made by pension optees. These may be the reasons of set funds constraints created in the pension trust fund for denying updation. Even then, there is no paucity of funds in banks. Banks are in comfortable position to make pension revision on the formula of RBI. Secondly, we wish to clarify that as per Memorandum of Settlement dated 29th October 93, signed under ID Act of 1947, is binding on all parties. It was unambiguously made clear that proposed pension scheme will be on the lines of Reserve Bank pension scheme, and Central Pension Rules 1972 will also applicable to bank employees on all dispute of clarification. Later on, it was discussed and approved in a small committee constituted to frame the detailed regulation held on 26 March 94 regarding eligibility for pension scheme, creating and maintenance of pension fund, dearness allowance and updation, etc. Finally, it was approved by MOF and made applicable to all pensioners of the public sector banks. Updating was incorporated in the Pension Regulation 1995 as per Clause 35(1) as amended in 2003, but it is unfortunate that instead of making necessary amendment, Government of India and IB are taking shelter of their own lapses and passing and presenting false information to the Parliament as well as Supreme Court of India. While concluding, we earnestly request Your Honour that Government of India, being the sole owner of the PSB, must ensure that pension regulations made for pensioners are not distorted by any leader of the communist thoughts-led union in connivance with the IBA, causing financial loss and the mental harassment to the pensioners by pleading against pension updation due to their political gains. Please ensure to place the correct picture of the Pension Regulation 1995, which has a legal sanctity, and be given due regard by giving approval for pension updation on same lines and from same date as of RBI. We hope you will agree with us and do the needful in the matter. Regards, R.K. Verma, Vice President, AIBRWA. Thank you friends. Namaskar.